Hi there folks. So as you know, I've been trading the markets for over 30 years ago now. With all that time gone by, you tend to forget what it was like when you first started out. And for me, it seems so natural to me that it's something I've done all my life. But the only comparison that I think I can draw is with my aviation career. Now I started to fly a little Cessna single engine aircraft back in around 2000, did my flying license in 2002. More recently, I've got involved in flight simulation. Just got myself into the Airbus 320 cockpit. When I went in there for the first time, I thought, what is all this about? All these buttons, all these switches, all these dials, all these monitors. I thought I couldn't fly. I had no idea what I was looking at. I was about to throw the towel in straight away. But then I got to delve a little bit deeper into it, looking at all these buttons and switches. Most of them are not actually needed to fly the Airbus. Now I'm sure there's going to be Airbus pilots out there saying you don't know what you're talking about. Well, clearly I don't know what I'm talking about. I'm not an Airbus pilot. But the point I'm getting to say is there is so much confusion, so much to learn. It's very easy to throw out before you even get started. And that, I think, is one of the reasons why many traders fail in this business when they come into it for the first time. There's literally so much information to learn. Or is there? Anytime you go onto a brand new MT4 download, you're presented with a screen that looks absolutely chaotic. No wonder most people just delete and move on to something else. But it doesn't have to be like that. I think trading really should be more simple than you even know. It actually amazes me how people complicate this so much. Often, the most simplest of strategies, the most simplest of approach is by far the best way to do it. What do they say? KISS, keep it simple. Whatever the last word is up to you. Today I want to show you just a very simple methodology of how you can trade the markets with very, very few rules. Just a simple methodology that if you explore deeper, you can develop a very, very good strategy out of. Come on. Okay, so let's introduce to you a simple pullback strategy. It's a very simple strategy. It basically relies on nothing but pure price action. So we've stripped out all those technical indicators that confuse most of the rookie traders, the newbie traders out there. Actually, we do use just a couple of moving averages just to help us determine the direction of the trade, but basically we've stripped it out. It's the bare bones, pure price action. Far better starting off using something so simple to give yourself half a chance. The more you put in, the more complicated it gets, the harder it gets. This is a trend following strategy. We've all heard that expression in the past. The trend is your friend, until the bend at the end, of course. I often say to people that are coming into the market for the first time, it's far better to get yourself a strategy that goes with the trend. Pretty much in all walks of life, really. You want to go with the trend, go with the masses. Why fight the herd, as it were? I remember certainly in the trading pits when I was back in the day, if everyone was shouting buy, 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 and Goldman's are buying, 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 I'm not there, little Andrew there, selling, selling, selling. I'm going with where the big money is going, where the big moves are going. It's like if you're swimming, you want to be swimming with the tide. If you're in a canoe going down the river, of course, if the river's coming against you, it's going to be much, much harder. Running around a track, for example. You know what it's like when you're running around a track, you hit the other side and you've got the wind behind you, you pick up speed and then you come around again and then you hit the headwind and it becomes harder to run. Not that I do much running around tracks these days. So it's always better to go with the flow. Actually, it's not always better. If you look at aviation, when you're flying an aeroplane, it's often not the case. If you're taking off, pilots want to take off into the wind. They want the wind in their face. When they're landing at an airport, they want the wind. They want to land into the wind. That's why a lot of the airports are positioned, or the runways are positioned in the way that they are, because the more wind, the more lift you get on the wings, and that's obviously what makes a plane fly. More about that another time if you're interested. So we want to follow a trend, and this is a trend following strategy. So what is a trend? Well, a trend is basically when the markets are making a series of, in this case, higher highs and higher lows. So the markets are moving up, buyers are coming in, then you have the natural. So there's no trends go in a straight line forever. Trends are often formed with this impulsive move, and then you have the corrective wave. Then you have the impulsive wave, and then you have the corrective wave as traders take profits and so forth. What this strategy is designed to do is to get into the predominant trend on the corrective wave. Now, we don't always know that the corrective wave isn't going to be an ultimate pullback, but of course, we're using price action to give us an edge so that we know we've got a better chance of staying in the trend rather than it being a correction to the downside. It doesn't always work. Of course, most strategies work without they're losing trades. This, of course, is an uptrend. And of course, the reverse would be a downtrend when it makes a series of lower highs and lower lows. Okay, so what this strategy does, it looks at multi-time frame analysis. Now, for the sake of this, I've just used two time periods. So we're looking here at the 4-hour chart. You see price action here on the 4-hour chart. And here's my two indicators that I am going to use. I'm going to use two moving averages. Here we've got two exponential moving averages. We've got the 8 moving average and the 21 moving average. If the 8 moving average is above the 21 moving average and it's been in play for say 3 to 5 candles, so here 1, 2, 3, 4, 5 candles, that basically means we're on play. We're looking for buy trades only. You want to make sure that the trend is established on the higher time frame chart, say 3 to 5 candles with the 8 above the 21 for buy trades. Then we drill down to our entry chart. Remember, only looking for buy trades. Okay, so let's move on as we go. So what this is doing now, you're seeing this, each one of these is a 1-hour candle. So 4 of these candles is represented by one of these candles. That's the higher time frame, the 4-hour, and this is the 1-hour. This is our entry. Here we see markets are moving up. We have consolidation. Okay, that is basically where you see buyers turn to sellers, sellers turn to buyers, bit of profit taking and so forth. The trend is still up. We have this another impulsive move up. Oops, there we go. And ultimately we have the pullback. All trends have pullbacks. All trends, no matter whatever time period, have their corrective waves, and it pulls back. As it pulls back into a level of previous resistance, that is likely to act as support, or more chance of acting as support. Often old support becomes resistance, old resistance becomes support. It's just the nature of the markets. Buyers turn to sellers, sellers turn to buyers. So this would be an entry there, something like that. Then the market's moving up again, okay, and then we have some consolidation as we see some profit takers coming in. We've got other maybe sellers entering the market, pushing the market back. Of course, the market does pull back, pulls back to where? It pulls back to the old resistance, now acting as support. It doesn't always work, of course, but most of the time you'll find that it does. This is just the basic idea behind it. I'll get onto the charts in a moment, and I'm going to show it to you on a real life chart, a few examples so you can see what it is as well. And off you go again, up to a new high. Remember, we've still got the trend in play. Each one of these, 4 of these candles represents one of these candles. And of course, you pull back again to an old resistance level, potentially will take you higher as well. So that's the basic idea of the pullback strategy. We're not relying on any indicators, just pure price action. Remember, these candles represent what human behavior is doing. It's humans, it's you and I that are moving these markets. And these candles tell us exactly what human behavior is doing. We have done courses and we've done videos here on candlestick patterns and so forth. If you haven't seen those already, you might want to go back and watch those at another time if all this is double Dutch to you. But these candles basically tell us what human behavior is doing. So this is basically an uptrend, same idea, but just a different way of illustrating it. Markets are moving up, has the correction, and it pulls back down to that correction. Old resistance acting as support, and then again this pullback stalls at previous resistance, acting as support this time around. So basically this is what we're looking for on the chart. That's an uptrend, of course, and this would be a downtrend. You've got lower lows and lower highs and so forth, and every time you pull back down, okay, and then the market rallies back up, hits a high, off it goes again, pulls back, previous level. So we're just looking at the price action left of the chart to give us clues where prices may stall in the direction of the predominant trend. This is not rocket science. This is why it amazes me why so many people overcomplicate of their trading, looking at all these different technical indicators. You just need to look at pure price action, where buyers turn to sellers and sellers turn to buyers. This is where people are making their decisions. They're making their trading decisions of uncertainty changing at those areas, and often those areas are respected. Let's jump on to the screens now, and I'll show you some worked examples, and then you'll see how clear this really is. Okay, so this is an example of the euro against the Japanese yen. You'll see this type of ranging environment. This is a nightmare for trend followers, but we're discretionary traders, right? So we can decide not to trade. We only want to trade when the markets are breaking out into trend. Now, I would say by using my support and resistance, that is most probably quite a good level to determine if we break through, we may break into trend. Of course, I'm using my high time frame analysis, using the 8 and the 21. Make sure the 8's above the 21 for at least 3 candles, and then I'm in play. You can see what's happening here at the moment. We did exactly do that. We broke out to the upside. I don't want to buy high. I don't want to buy highs of any markets. I want to buy low. So I wait for the pullback. I know the trend is up because I can see it on a higher time frame. I'm going to wait for the pullback, and I'm going to enter the pullback at the previous level of resistance, which should act as support, and that worked out perfectly there. And then off we took again to another impulsive wave to the upside. I don't want to buy high, I want to buy low. I'm going to wait for that market to pull back, and it does indeed. It pulls back. And where does it stall? It stalls at the previous high, previous resistance, now acting as support, and off it goes again. Now this one actually here, I think it might have been stopped out on. Okay, so we're taking a trade higher. Okay, I don't want to buy high, I want to buy low. I'll wait for the pullback. I'd have been buying in here. I think I would have got stopped out on that one, but that's okay. I'll wait, and off I go again. Okay, we take another move higher here. I don't want to buy high. Wait for the pullback, pulls back, and I would be buying around that level. I would have enjoyed those nice gains all the way up to those highs up there. So you see how this is working. Waiting not to buy high, but wait for the pullback into previous resistance, which should act as support, and the same of course in the opposite direction would apply for short trades. This is the Aussie CAD on the 5-minute for you scalpers out there. It's a great way to trade on the lower time frame charts as well. Wait for the confirmation on the higher time frame charts. Maybe use the 1 hour for your trend. This is a 5-minute chart. I'll just plot as we go. Of course, this is all old news because it's historical and I've cherry picked it, but I just want to show you how it works. There you go. Well, it got stopped out at the end there as the market turned on itself. But you see, plenty of entries to get into this on the way down using a simple strategy like that. So what I want you to do now is not take my word for it, but pull up a few charts, look for some trending markets on a higher time frame, then drill down to the lower time frame and see if you can't see those patterns repeating themselves all the time as the markets make the impulsive move and the corrective wave and the impulsive move and the corrective wave and the corrective wave stalling at the previous level of support and resistance. I think you'll be finding it very, very interesting. Let me know your thoughts in the comment section below. So give me a thumbs up if you liked the video, give me a thumbs down if you didn't. Don't forget to subscribe to the channel if you don't already do so. Let's kick off 2022 the way we want to continue, and that's on the road to success. We'll be dishing out lots of content here throughout the year. You don't want to miss it, so hit that notification bell button. You'll be notified the moment the next video has been released. You can follow us on all the socials as well. Now, hot off the press, we do have 2 new mentors that have joined the team in the last couple of weeks, and they're getting initiated now into our trading room. If you want to find out all about that, introduce yourself to our new mentors, do come over. You can take out a 7-day free trial. There's now 4 of us working around the clock, looking at market opportunities, discussing trading setups and so forth. So you can take the 7-day free trial. You've got nothing to lose, everything to gain. If it's not for you, you can cancel at any time. If that's not your thing, that is not a problem. I'll see you next week.
300, 200, 100, 50, 30, 20, 10.